Whenever I meet somebody that's got a property for sale and it's an investment property, I always say, the first question I ask is, are you an investor? How many properties do you own? If they go, well, I don't own any properties, I live in an apartment, well, that gives you a pretty good indication that they're not in the investment field. If you're talking to a real estate agent, you need to ask them, can you give me a list of bank-owned properties in the area that I can compare with? If they say no, they can't give you a list, or they just don't know how to find it, well, that's another good sign that you need to find another agent. You always need to ask or do your research and find out what the tax value is on a property. Here in Atlanta, there's certain properties downtown that you could buy for as low as $7,000. But when you look at the tax value, or what the city of Atlanta says it's worth, they might say it's worth $150,000. So actually, you pay more taxes on it every year than what you paid for the property. Always ask what the tax value is. If the person you're buying it from can't tell you that, then just once again, run from the deal. If it's a property that's listed in the MLS, ask the agent, how many days on market has this property been in MLS? If they can't give you that answer, run. Anytime you're buying a property from an individual, you need to ask them, is this a foreclosure, or was it a foreclosure? How much did it foreclose for, and when did it foreclose? If they are not willing to give you that information, then you need to walk away from the deal. One of the things that you always ask, or you want to try to find out, is that, can you give me a list of comparable sales in this area? If they can't do that, then once again, just walk. You need to ask, this is a trick question, you always need to ask this person that's selling you the property, what will the property appraise for? Somebody tells you it'll appraise for a certain amount, either say, show me your appraiser's license, or show me the appraisal. If they don't have either one of those two, then once again, you need to walk. If you ask me what a property will appraise for, I say, I'm not an appraiser. I can tell you what a HUD property will appraise for, but these bank-owned properties, I can't tell you what they'll appraise for. You need to ask the seller, is this a HUD property? Especially if it's an agent. Is this a HUD property? If they don't know the difference between HUD and foreclosed, you need to walk. Another question you need to ask is, how was the listing price determined? The general answer that you're going to get from somebody that's not an agent is that it was determined by comparables in the area, or comparable sales in the area. Then that's when you need to ask for a copy of those sales. If you're asking an agent, they need to say it was either done by an appraisal, which I can get you a copy of the appraisal, or the listing price was determined by a BPO. A BPO is a broker's price opinion, and it's ordered by the asset manager to determine the value of the house. And that's determined on comparable sales within the area. The other question, if you're dealing with an agent, is you need to ask them, how many bank-owned or foreclosed houses did you sell in the last year? I know everybody's got to get experience somewhere, but you just have to, if they have no experience in this area, then you just need to run, because you're going to get burned in the long run. Those 10 questions, if you'll use those 10 questions before you buy any investment property, will really help you determine if you're on the right track. Like I said before, I advise that you get with a good real estate agent that deals in investment properties. The other thing that I would suggest that you do is get involved with a RIA, which is a Real Estate Investment Association. And there's good investment associations and there's bad ones. The good ones will provide you an education, try to help you. The bad ones basically will try to sell you books and tapes. There's a large RIA that's here in Atlanta that at one time was the largest RIA in the nation, and it basically failed because it was trying to promote the evangelists that I talk about by inviting them in, putting on seminars, and then the evangelists turning around and selling their tapes. So one of the things to look out for is to stay away from the investment associations that are strictly in the business of selling you books and tapes. You need to have a one-on-one. They need to have free classes, free mentoring to help you in your networking. But this goes back to the article that I asked you to read called The Sermon. We talk about wolves, sheep, and sheepdogs. You don't want to be a sheep. If you're a sheep, you want to stay close to the flock. And by that I mean you need to stay within a good real estate investment association and have people watch out for you, and you watch their backs and they watch yours. The wolves are like these people that try to quick turn these properties for a profit. There's not all wholesale deals are bad. There's some great wholesale deals out there, but there's just some bad wholesalers. So just beware of that. And like I said, one of the things that we're trying to do is educate you and tell you where not to go if you're going to buy a property. This is a house that was in Jonesboro, Georgia. It's a 3-bedroom, 1-bath house. I get these emails all the time. And it was built in 1953. This is a wholesaler trying to wholesale this house, and he's asking $65,700 for this house. He's saying that the repairs are going to be about $13,500, but more importantly, he's saying that the after repair value is going to be $120,200. So if you buy this house and you do the repairs, he's saying that you can sell it at a profit of $67,700. Well, that's real good, but if it's that good, why doesn't he do it himself? So once again, you go back to the guy that's selling this house and you ask him these 10 questions. If you do a little bit more research, you'll see that the tax records on the house were $66,000. So he's saying that the after repair value is twice what the tax records are. I don't really think so. But then when we did a little bit more research, we found out that the house was listed in MLS for $55,000 and it was showing under contract. Now we find out that the guy doesn't even own the house, but he's trying to flip the house or to quick turn the house to us. So in this case, we could go back and do some more research. He's probably got the house under contract for $40,000. Maybe put $500 down for earnest money, ask for a 60-day closing. He might have made it contingent upon getting a loan. There's no telling what happened in this case. But anyway, during the next 60 days, while he's got this property under contract, he's going to try to quick turn it to you. And let's say that he could buy it for $40,000, and you come along and say, well, you're asking $65,700, would you take $60,000 for it? Well, of course he's going to say yes, take that profit and run. You ask, how does he do that? They do what's called a back-to-back closing. The back-to-back closing, you'll be in one room, you're buying the house from him, and as soon as you close and he's got his money, he'll go to the room next door and close the property on the same day. And he makes about $20,000 and you get stuck with a piece of junk. So these are the things you just got to be aware of when you're out there looking for investment properties. Let me say a couple of other things about what we call the wolves. The wolves will basically prey upon people that don't have the money to buy a house to begin with. When we used to go to the RIA meetings here in Atlanta, and we just finally quit going, they had a vendors portion before the general meeting where all the vendors could gather and show their wares. And we used to just stand there and watch the new investors come in, and we could spot them. They might as well have had a blinking light on their head. And we call these people the sheep. And they would go over to the wolves, and the wolves would show them a great deal on a house, which was actually not a very good deal. They would introduce them to a hard money lender who would absolutely take their head off, and then to a construction guy that would take their head off. And it ended up that all of this was a false tale. They were leading them down a bad path. And if they had just backed up for a minute, and done some research, got an education, they would have run out of there and not bought that deal. Too many times they buy that deal, lose their money, go into foreclosure, and then their life of being a real estate investor is ended forever. And they ruin their credit and their taste to be an investor. So once again, you just got to watch out who you deal with. Just ask the 10 questions. A lot of people ask us, well, where do we find a good agent or advisor? There's several places. Get with other investors and see who they recommend. You can find those investors at your local RIA, and they'll generally point you to the good agents. A good agent is going to sell you more than one house. Okay, a bad agent is going to sell you a bad deal, and they're going to run. This is a long-term business. You can't stay in the business by doing people dirty, selling them bad deals. We've got investors that have bought as many as 30 houses from us in a year. So as long as we treat them right, give them good product, they're going to come back to us. If you have a question about buying the house, just do your research. Do your due diligence, find out, and slow down. There's plenty of houses out there. People have been buying and selling real estate since the beginning of time, so it's not something that you've got to jump into tomorrow. So once again, thanks for watching. If you have any questions, just shoot us an email and we'll get you an answer. Thanks again. Have a good day.